Right then, good afternoon everyone, and just a quick update from us at the end of a pretty chaotic week close to home. We'll start on Monday. I'll start on Monday at the new Chancellor, Jeremy Hunt, made a statement. He had a bit of a speech as well, but made a statement basically reversing all the tax cuts, or the majority of the tax cuts that was brought in by Liz Truss and Kwasi Kwarteng a number of weeks ago. That caused, it's caused chaos in the economy, caused chaos in financial markets. Sterling sold off heavily, the FTSE sold off heavily. They have since bounced back on the reversal of these statements, but what that has then done is that has kind of led to the demise of Liz Truss, which is no longer. She is gone. She is not the Prime Minister anymore. She had to step down, and she had to resign yesterday. I think what happened on Wednesday in Parliament was the final straw. They had a vote on allowing fracking to begin again in Parliament, and basically there was rumours that Tory MPs had been forced to vote in favour of it, which some of them didn't agree with. Naturally, you're going to get some discrepancies in opinions, but essentially they were forced to, or rumour has it, they were essentially forced to agree to vote for it, and they would lose their job. They would lose their job if they did not, which is kind of insane, but that was then met with some revolt from Tory MPs who did not even want to go in to Parliament. They did not want to take part in the vote and wanted nothing got to do with it. People calling it a disgrace, saying that the government is a disgrace and that she needs to go. Even people in her own Parliament, or in her own party, out on live television, BBC News, Sky News, calling the current government a disgrace and saying they want nothing to do with it. So that then led to her having to resign yesterday, and really then that the policies that she got elected off the back of, she tried to introduce, and they were then completely reversed. So really, she cannot implement the policies that she promised. Caused the amount of chaos that she did, caused chaos in markets, caused chaos in the economy, and then had to be bailed out by the Bank of England. Plus, then obviously the chaos that ensued on Wednesday, with the trying to force people to vote for the kind of increasing on fracking, or to bring back fracking, was then the final nail in the straw. Obviously, the amount of MPs that came out against her was obviously a contributing factor to that. We saw a number of resignations, a couple of sackings, and then the people who resigned, then wanted their jobs back, and it was just chaos then on Wednesday. Coming into yesterday, Thursday, what happened then was she did resign. She gave us a speech that she was going to resign. After that, then she said that by the 31st of October we should see a new Prime Minister. Currently Rishi Sunak leads the polls, who ran alongside Liz Truss for leadership of the Conservative Party. We've also got Boris Johnson seemingly wanting to have another crack at it. He's got a number of votes of confidence from the Tory party, but I mean that would be a comedy show if that was to happen again. But anyways, we will cross that bridge when it comes to it. Apart from that, as you can see, the 20th National Congress of the Chinese Communist Party, again, President Xi back in again, talking about wanting to retake Taiwan, and then also looking to reduce the quarantine on travellers into China, people coming into China. They wanted to reduce that from 10 days to 7 days. That then has caused a bit of an uptick in risk sentiment when it happened, but it hasn't really materialised in much left after that. So not a great deal to go off in terms of that for the rest of the week when it comes to China. Apart from that, if we look at the data, we had some UK data out. We had a CPI print out of UK on Wednesday. You see the previous figure was 9.9%. Consensus was for 10, and then the actual then was 10.1. So slightly higher than anticipated, but that was certainly not the main focus of attention when it comes to the UK this week. We'll look at we had some consumer confidence figures out earlier on. Better than consensus, but still terrible numbers all the same. And then retail sales still down. Consensus was for a drop of 0.5%, and we actually got a drop of 1.4%. So consumer spending continues to slow in the face of high inflation and the somewhat inevitable recession that is still to come. So not a good week in terms of data for sterling. Obviously then inflation pushes higher, which causes the central bank to raise interest rates more. But we saw some upside on Monday off the back of this statement, the reversal of the tax cuts, but after that we have not seen that materialise, and we've grinded back lower again, sort of in the midst of some ongoing dollar strength. But apart from that, we had some earnings out. We had lots of earnings out. As you can see across this calendar, obviously I'm not going to go through each individual stock, but You can see here there is more greens than red. There are more beats on earnings than there is misses. So in terms of the earnings reports throughout the week, you can see if I just flick through it, somewhat positive earnings. Quite strong earnings in a number of companies, namely some big ones like Tesla, Netflix, and the likes of that. Goldman Sachs as well had some positive earnings as well. And yeah, as I said, I'm not going to go through each of these companies, but more strong than negative. You'd expect that to cause some upside in stocks. If we have a flick across then to the chart, you can see the S&P 500 has continued to grind lower over the course of the week. Over the last kind of couple of hours, though, we have seen a report in the Wall Street Journal that the Fed were looking to hike interest rates by 75 basis points in their November meeting, but then potentially slow to 50 in December and then thereafter. So that would go against the numerous 75 basis point prints we were expecting off the back of that strong inflation print not so long ago. So it's a little bit difficult to then read into that. Do we get the 75 and then a 50, and that is then seen as a positive for markets? You see a pretty big 4-hour candle here. The last one that just formed just closed. I mean, it closed at 3 o'clock, closed a couple of minutes ago. We can see it. We'll just go down to a lower time frame. You can see that big 1-hour candle off the back of potential lessening or a slowdown of the rate hikes, which was going to come at some point, which then causes some upside in stocks when we do see it. So maybe we start to continue to push higher from here off the back of a slowing of the pace of rate hikes. What that has also done is it has caused this US 10-year yield to pull back. We did break above this 4% earlier on in the week. This week we were looking at that level last week on this video. If we can get above 4%, that should cause some negativity in stocks and continue to get stocks to press lower. We did push above it, got above 4% and managed to sustain price above it, and then you can see stocks downside off the back of that. So these positive earnings were not enough to get this S&P to push higher. S&P continuing to be driven over the course of this week by that 10-year yield. What that does is that 10-year yield, it continues to push dollar yen higher. Now the Japanese central bank, the Bank of Japan, have maintained the fact that they are not going to hike interest rates. They don't want to change, remove the anchor on the 10-year yield. They have had a few comments that they were going to intervene or looking to intervene or doing stealth intervention, but looking at that chart, haven't really done too much to stop, and I think they are powerless really to stop it unless they get a more broad-based pullback in the dollar. You would probably expect a more broad-based pullback in the dollar if we do get that slowdown on rate hikes. So that article in the Wall Street Journal is definitely one to keep an eye on, and any further comments out of any Fed officials that suggest the slowing of rate hikes is definitely something we can look at for some direction. We have a look at cable as well. Cable, this was the upside then off the back of Chancellor Jeremy Hunt. At one point on Monday, we were up 250 pips, 2.5% nearly on cable, but since then we have reversed and we've just gradually trended lower, probably in line with some of the chaos that has gone on in the midst of the UK government. Apart from that, though, there's not been a great deal of information out this week. Not a great deal in the way of geopolitics or news flow, and really not a lot to go off trading wise unless you're kind of long dollar yen, which continues to truck higher. We have had some broad-based dollar strength this week, but if this report in the Wall Street Journal is to be believed and we do get that slowdown in the rate hikes, then it should create us some opportunities across the board on the dollar for a more broad-based dollar pullback. We'll flick back to the calendar just before we wrap this up. We'll come around to next week. We have a couple of things out next week. We have the Bank of Canada on Tuesday. There's kind of two options here on the trading economics calendar, maybe a 50 basis point in terms of market consensus, 50 basis point hike, and then there's potential then for a 75 basis point hike when it comes around to the forecast. Now, we had Canadian inflation this week, did slightly beat expectations, but is slightly down on last month, so kind of a 1-for-1 figure, but it remains to be seen then what happens when it comes to the Bank of Canada next week. Do we get a 50? Do we get a 75? Remains to be seen. We look at the interest rate decision out of the ECB as well. We're expecting a 75 basis point hike, which is in line with what other central banks are doing with those 75 basis point hikes, but to be fair, the 2% interest rate is still lower than it is across most of the other or all of the other major economies, apart from Japan and Switzerland, obviously. We'll then come round to the Bank of Japan, and in theory they I suppose the debt to GDP ratio in Japan would suggest that it makes it a bit tricky for them to go raising interest rates to remove that anchor in the 10-year yield. But if they do not decide to do that and they stick to that script, you would probably still have to expect yen weakness across the board, and I'd say that seems the way to play it. If those yields continues. Now, if that 10-year yield on the US continues to pull back, continues to push lower into next week, and we get back down towards 4%, that should give us a bit of a pullback on the Japanese yen, or a pull up really in the Japanese yen. And that could also create some opportunities. That's gone so far so fast that if we do get a more broad-based dollar pullback, and the yields then pull back as well, 10-year yield pulls back, that should create some opportunities in dollar yen. And the fact that it has rallied so hard so fast probably suggests that that's a good one to play a pullback on. Apart from that, you got some GDP figures out of France, Spain, Germany. You got some inflation prints out of Germany, and inflation print out of Germany, CPI print out of Germany next week, which again is likely to show an increase in inflation. The Italian CPI print, the French CPI print. Again, some somewhat important figures out of next week, but the ECB will know that information, or you would like to think they know that information on Thursday when making that decision, and we don't get that number till Friday, so we'll have to see then how that plays out. But not a massive amount of data out next week, not a massively busy economic calendar. Do have the ECB and the Bank of Canada in terms of the central banks, and then a CPI print out of Australia that is likely to come in strong. But does it create much of a move? We'll have to see. Pretty difficult to isolate some direction into next week. I think if we do get that pullback in the 10-year yield, do get that pullback in the dollar, does open us some opportunities. The ECB hiking interest rates next week. If we get a pullback on the dollar, with the euro being anti-dollar, euro-dollar higher might be a way to play it back towards parity. But I think stocks will be one to watch, especially after that announcement today, or that article in the Wall Street Journal about potential for the slowing down of rate hikes. That is then positive for stocks off the back of positive earnings this week. We might get some upside into next week in stocks. But that is it for me then, folks. I'm going to wrap it up here then. I'll let you get on with your evenings, with your afternoon, and have a good weekend. Do get some rest, do recharge the batteries, and we'll be back again next week for another week of trading. Thank you.